Hey guys, welcome to Risk to Riches Futures and Options Education. We're going to start off talking about futures and we're going to go into options. It is important that you take these notes and that you learn as much as you can along with the videos. I'm going to link you to other people's YouTubes where they teach this as well. And the reason being is that you need to understand what you're doing before you do it. To blindly go into the stock market and to just start throwing money around is nuts. So you at least need to understand the basics, and that's what we're going to do here. So let's go to the next slide. What are futures? Futures are agreements to buy or sell an asset at a predetermined price in the future. Traders utilize these contracts to capitalize on price fluctuations. You do not actually own the asset. Instead, you are focused on price movements. It is the price action that will generate your profit. And this is a very true statement. The price action generates your profit. Remember that. And that's the same thing for futures, the same thing for options. When the prices move, that is where you profit. If it moves going in an uptrend, you profit if that's your stance. If it moves going in a downtrend, you profit if that is your stance. The only time that you don't really profit or it is hard to profit completely darn near impossible is when the market is consolidating. And you're gonna be like, Danny, what is that? Real quick, if the market is consolidating, that means you cannot see prices rise and you're not seeing prices drop. You're only seeing it move from left to right. So it'll go up to $11, bounce back down to $9, go up to $11, bounce back down to $9, maybe 8.50, then up to $11, then 9, and da, da. Now some people go, well, I mean, if it dropped $2, okay, like no, you don't want that. You want larger movement and not $2, let's say trading the options that you're going to learn about with me. But I'm just using that, like 2 points is moving 2 points up, 2 points down, 2 points up, 2 points down. That's not anything unless you're a scalper, and we really don't want to talk about scalping as a beginner because scalping is a skill and it's precise and like you got to have precision with that. So we're not looking at consolidated markets. We're only looking at ones with strong trends and volumes. Okay. Next, think like a farmer. Secure the price of wheat at 100. Okay. Now for delivery in 3 months. If the price rises to 130, you've benefited by saving money. If the price falls to 90, you still pay 100. This illustrates how futures operate. That's a little tongue tie there. You lock in the price in advance. So I know that when I read them, I'm just like, okay, even me, I'm reading it like, okay, yeah. But how can I break it down even simpler than this? Um, okay, me right now doing options on the S&P or what we call SPY. Okay, so SPY contracts, they can in the daily or at the end of the week. And I would tell my order that I put in, I think that SPY is going to increase from 100, let me see. Yep. $100 to $130. I think that's what's going to happen. If that in fact happens when I sell, quote unquote, close my position, I have made money because the market, it behaved in the way that, the trend was showing me as a trader that, okay, yeah, I think this is what's going to happen. And then if it were to fall to 90, guess what? I've still paid that price for it. And I have now lost a little bit of money because that's not what it did. It didn't go in the direction that I thought it was going to go. It went against that. And so I lost. There we go. Or I lost a little bit of profit. I made no profit. All right, common future products. We got the S&P, which we got the mini and the micros. We got NASDAQ 100, mini micros. We have oil, gold, commodities such as corn, wheat, etc. You're not buying gold and oil. You are trading the price movement of gold and oil. So when you are a trader, you're like, you know what? Based off of the war talk and the this and the that and the that and the this, I have a stance that the price of oil is going to skyrocket because there's a lot of tension between this and this, and they're going to up their prices. And then you can take that stance, you can confirm, you can make sure that everything checks out on how you're feeling your bias, and then you execute your trade and you go from there. Um, so that's what they mean by you're trading the movement and the prices and you don't actually have it. All right, next slide. Top benefits. Futures are open nearly 24 hours a day. No, this is true. So they're open for 24 hours from Monday through Friday. Well, not 24 hours. Let's say 23 hours or like 22 and a half, something like that. I know that the market closes down at 4:30 and then the market opens back up. Oh, I hear a 2-year-old coming, making noise. The market opens back up at 6 p.m. EST. And then the only day that we're not trading is Saturday. You might hear her singing a little bit. Let me up this real quick so she doesn't distract too much. So with that being said, you can trade with small accounts. You profit whether the market goes up or down, but you have to have a stance when the market is moving. You can't just be out here just looking crazy. It's perfect for fast in and out trades. Honestly, futures would not be for someone who has a 9 to 5, someone who has busy kids that are hanging from the chandelier, etc. And I'll tell you why, because it does require precision. It does move very quickly. And if you're not ready for that move, or you're not paying attention, or you do not have your risk management tools in place, you could lose out. Or you could also gain. You could you could be like, you know what, I'm just going to, this happens. This has happened because I've done it before. I'm like, I'm only going to, try to make a 100% return. And for some strange reason, I got distracted and it ended up being a 200% return. I kid you not. Was it 200? Yes, it was. Yes, it was. So actually, that worked out in my favor. But was that a good thing? Not necessarily, because let's say I wanted a 100% profit. Something happened while I was distracted, and then it was like, boom, all my money's gone. And I didn't set any risk management. I didn't do a stop loss. We'll talk more about that, or whatever the case is. And now I'm out of my money. Absolutely nuts. Okay. So example, micro NASDAQ. Okay. It's 18,000. You buy one contract, one position, just one. Each point gives you $2. So if it goes from 18,000 to 18,010, you've made a $20 profit. If it drops to 17,990, that's a $20 loss. Now, right here in the beginning of this futures presentation, I need to tell you something. When you are trading, you have to have enough money for pullbacks. And I'm going to tell you what pullbacks are. So the market never trade. Well, I mean, sometimes it does, very rare. But typically the market goes into higher highs, higher lows, or lower highs and lower lows. So it's like a step. It goes up and then over and up and up like that. It kind of do like that, or it tumbles down. However, at some moments in those steps, like and I'll show you the illustration, it will pull back a little bit and people get scared. Like, let's say you have a stop loss of $20. You have a stop loss of $20. However, when you are trading micro NASDAQ, the pullbacks on micro NASDAQ, like when the market, people close their orders out and we, are taking a brief little break. Okay. The pullback could be a $40 pullback. If you have a stop loss of $20 set, but the pullback is 40, now you've just stopped yourself out of your trade because you're like, oh, well, I don't want to lose a certain amount. And this is where market analysis, understanding volume, doing all of that is so important, because a stop loss can go against you sometimes for a trend that's really in your favor. You're like, yeah, I know that this is going up, but when it does that little pullback, that little rubber band effect, it pulls back to a certain point and then it bounces up. Now, after the first 3 pullbacks, like, up, pause, go down a little bit, up, pause, down a little bit, up, pause, like that. After the first 3, you're good. You don't feel the pullback as much. It's when you first enter that you begin to feel those drawbacks in the market and you get petrified and you're like, oh no, the market is going against me. You're like, crap, 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 crap. So the best thing that I could tell you is to hop in and, like my mentor says, which I put in another slide, consider your money already gone. your money is already gone. Okay. If you can do that, you will not be petrified when the pullback happens and it goes past what it is that you want to give up. Or if you've already done your studying about this particular stock and you're not hopping all over the charts, you know that a pullback can be as steep as $50. And so you're willing to have a stop loss of 60. You're willing to give up 60. Once it gets past that 60, okay, oh, we're, oh, no, 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 no. This could indicate a change in direction, a change in my trend. So I really just wanted to break that down for you. I'm going to do that here and there, you know, and this is going to be an interesting way to teach because I want to get out the way the hot topics, things that I wish people would have told me. Like I was taking courses, looking online, and they were giving me a lot of these slides I'm giving you because it's easy to get a slide together. It's the talking and the sharing of experiences that actually teaches you, okay? ChatGPT generates slides. ChatGPT can give you a guideline on how to generate educational material for people who want to learn. It is when someone sits and they kind of talk to you a little bit that you're like, oh, snap, okay, I see what you're saying. And that helps you out, especially when you're a beginner. So we're going to take brief breaks. This may go into 20 minutes, but it'll be 20 minutes that are well worth it. Hear me out, okay? Know this language, margin, cash needed to open a trade. Oh my gosh, margins. I still got to create my YouTube video that talks about that. I was a new trader. I was 1 week into trading. I jumped in on futures, had no idea about margins, no idea about margins. And that every time I added a contract, my margin level got higher and that I needed to put more money in my brokerage. So I'm watching myself shoot up, money going well because we're on an uptrend. I add a contract. You know, I don't know what I'm doing basically. And I went from $600 to $1,100 to zero in the course of 10 minutes. That moment, my heart sank, my physiological, I felt weak in the knees. I felt spaghetti arms. It felt like I was getting pulled over by the popo. Like I could not explain that. And I didn't even know what had happened. Why? Because I like, no one talked about that with me. Like, and this was before my mentorships. No one had talked about, oh, girl, your margin level, like, get it together. So I'm telling you, when you start trading futures, your broker, which we're going to see that when you paper trade, your broker in your paper trade is going to tell you, like, for this one contract, you need a margin level of 200 and something dollars. You need a margin level of 500. You need a margin level of 1,000. Typically, before you even choose the contract, it tells you that. If you don't have enough money to cover that margin and you're teetering tottering, even if you're doing good, even because you got to remember, as you're making money in your trade, that's money that has not yet settled. So for me, I was over here trading off of maybe $200, and yeah, I was up to 6 and then moving towards 11, but I forgot that my settled money was just $200. And so they were like, oh, bet, boom, let's go. And I lost everything. That was the sickest I had ever been. The sickest. Okay, like I don't even. I laughed at that. I gotta make a video of the dumbest things I've done as a trader. All right, so a tick is the smallest price movement. Leverage, you control more with less. Contract is the unit that you trade. So every time that you trade, whether it is options or futures, you are trading a contract. When you click buy one, sell one, that's a contract. That is a contract. Now, that's not no contract like, oh my God, sign my name on a dotted line, but you need to know these terms, okay? So futures, risk to riches, is all about managing your risk for potential reward. Learn the tools, respect the leverage, and stay disciplined, and welcome to the world of futures. However, I was like, you know what? Let me do a little extra. Yeah, that's what I said. Let me do a little extra. It's me trying to teach this while being a mom to a 7-month-old. All right, so before you hop into more learning, let me and I don't know why I said do over, and we'll fix that. But let me go over what to expect with the training journey. Things I wish someone told me that I was going to experience. You're inevitably going to lose money while trading. It doesn't mean you have to lose large sums of money. There are parameters you can use to ensure that you don't lose more than a set amount. But in the words of my mentor, Once you start trading money, consider it gone. That's the best way for you to not get upset. Right here, let's talk about the psychological thing of money. If you struggle with poverty, if you're trying to make money for bills, if you are stressed about finances, if you don't have a good relationship with money, which I'm going to require people who join my Discord, like, please read these books like Mastery of Self, The Soul of Money, The Psychology of Trading, The Psychology of Money. Like, read these books, because if you don't have a good relationship with wealth, prosperity, or if you're someone who's lived within poverty levels or things being tight, et cetera, you will take it to heart to lose. You will take it to, if you're not a good loser, you're going to be angry. You're not going to know how to process your $100 loss. And I'm going to come back better tomorrow and do a $300 gain. And then this leads to something that we call revenge trading, where all of a sudden the market has decided to change structure. It broke character, changed the structure, went in a different direction. You got a different trend going on, and now you've lost the money, like $60, $70, right? Because that's where you had your stop loss. Some people go, oh, heck no. Okay, you want to change directions? I'm going to change directions with you. Horrible idea. So you change directions with it and you hop back in. When you change directions with it, it changes again. And you're like, oh, heck no. And you keep doing these changes. And I've done this before, that are not profitable. And now you're looking stupid. You're looking real, not psychologically well. And now it hurts. You feel it in your chest and your stomach. Why? Because you did not just set your parameters. Shh. No, ma'am. No, ma'am. Thank you. You did not set your parameters and just start trading. Instead, you decided, I'm going to revenge trade. Yeah, I'm going to wrap this up because my girl thinks she's going to start teaching and we're not going to do that. While trading futures, you have to be aware of your margin levels. Your brokers will require you to have a certain amount of money in your account while trading. If you don't, you risk your account auto liquidating all your money immediately. Start with stocks that move small when you invest, like less than $1. Paper trade first. All brokers offer paper trading options. And when I say options, I mean not the literal option like trading an option, but paper trading options to the consumers, right? So paper trading is pretending to trade until you get the hang of things. They give you fake money. It's like playing, like you're I don't want to say logging into a game, but that's the best way I could put it. You're logging into a game and you can put the pretend money at 25,000, or you could put it at 100, something realistic, something that you would start off with, and then you move on from there, right? Paper trade first. When you start to invest, do investments that are small on the futures side. Do smaller investments so that if the trend goes against you, you are not like, oh my God, oh my God, oh my gosh. It's only you losing maybe $5 versus you losing $200. And this is why you should also not get into trading when you got something to do or something to prove, okay? Get into trading when your bills are paid, or you already got another job, or you already got another side hustle going on as an entrepreneur. Do not do it and depend on it, because you don't know what's going to happen in this market. While a lot of people like to trade during red folder days, we're going to discuss this more. Those days may have increased volatility, quick movements that are steep in the market, and it could bring up large wins and large losses. Okay. For example, this past Friday on June the 27th, President Trump was doing a little bit of talking, a little bit of bumping his gums, which he loves to do, okay? A lot of people say they miss Sleepy Joe. But President Trump was bumping his gums, and he talked a little bit about something in regards to Canada or someone, whatever it was. Oh my gosh, I watched the biggest flush I had ever seen. Well, actually, this is the third time I've seen a flush like that since April. I literally watched S&P and QQQ tumble, tumble, tumble. Now, the only person with this volatility and this large, steep movement that it benefited were people who expected the tumble. Okay, remember what I said about red folders. People who expected the tumble, they got banked. People who saw the tumble knew you know, what confluences and what things they look for on a higher time frame, next time frame. Okay, boom, yeah, this is confirming that this is what's about to happen. Let me go ahead and hop in. Those people made bank. Anybody who was expecting the market to continue to increase on that day lost their money. If they were in a contract and they were expecting the S&P to go to 600 for some strange reason, guess what? Guess what? Because no, and I could be using the wrong, it might be past 600, but figuratively speaking, let's say it was at 550 on Friday, and they were like, yeah, we've been on an uptrend, a strong uptrend since Monday, and it is going to go up to 600 by Friday. Yeah, Friday around like the 1-2 o'clock hour, biggest tumble I've ever seen in my life. Now, the beginning of the day, it was an increase. They would have been correct. But after lunch, I mean, uh, I just sat there in disbelief. That's the type of things that you need to know about. Yeah, mommy. That's what you need to know about as a trader. All right, let's go to the next one. You should look at different strategies and see which one's easiest for you to understand, which one makes the most sense to you. Okay. Adopt that strategy, what we call strats. Add or take away things and make it your own. You can choose to share your strat or you can gatekeep it. The choice is yours. However, perfect your strat and use it daily. Be aware of FOMO, fear of missing out. When trading, this is an instance where you see someone else winning and you want to join the trend and start winning with them. What happens is a lot of people, they'll do that and then the market reverses. Why? Because of buyer or seller exhaustion, depending on what way the market's going. And instead of gaining like the person that you're mimicking, you end up losing money that you ain't even plan to trade because you're like, man, I gotta jump in. Everyone's talking about unless you're there for the initial, just wait that out. You will catch you. I promise you, as a trader, you're gonna catch one. You're gonna catch one. Clap for your friends and be happy for them, but wait it out. This past Friday, when the market melted, I actually waited it out. I did not hop in because I was not in a contract. I had already done 2 contracts. I'd already made gains for the day, and after 2 contracts, I don't trade anymore. You know, that's one of my rules, my stipulations. So when I saw the melt, I wanted to get in and I had enough confluences and proof and everything I needed to get in. I was watching people come away with $1,000, 1,200, 1,500, but I knew that no, my rules are A, B, C, and D, and this is what I'm going to do. So that's what I did. All right. So when you find a mentor or a membership Discord, trust me, there's going to be a lot of you guys being a part of multiple Discords. First off, no one should take offense unless they've been wronged by somebody else that you're in any other Discord. Okay. So if you're a part of multiple Discords, that's your business. That's not our business. That is your business. But make sure that when you actually invest in a membership or a mentorship, that you're making that money back in trading by implementing their teachings and getting guidance from them. If you are not getting that back, then they are just profiting off of you, and that's not good. Now, there's one of two things that's happening when they're profiting off of you. Either you're not sticking to your rules, you're not implementing what you're learning, you're not measuring up. But if you're doing everything that you're supposed to be doing and you're still not profiting, then you might want to reconsider where you're investing your money. My mentorships, they've helped me and my family eat, and I will or my memberships and my mentorship, the one mentorship that I have taken from Sierra Leah. So with that being said, there you go. I want you to try to trade the trend, but you should have a primary stance as a beginner trader, just so you don't flip flop all over the chart. Are you a bear or a bull? Bearish market. The market is making money off of a downtrend. Bulls, a bullish market, the market is making money off of an uptrend. I don't know why, but I had a moment where I was like, did I just type this wrong? But nah, I know what I'm doing. Once you master a particular direction, how to identify if the market is agreeing with your stance, the confluences, etc., and you perfect your craft, then move into trend trading. Leave the trend trading for the future you and for those who are experienced. Because one trend in the morning time could be one thing, and then in the evening time it could be the next thing. And or let's say you're trading multiple things or you're doing options and futures at the same time. Okay, so now you're looking at one of your, like, your option is in an uptrend, but your future is in a downtrend, but you're still new and you're still learning, and you get them mixed up, and now you've bought a contract that went against you, or you entered in a trade that went against you. You see what I'm saying? Don't throw too many things at yourself. Keep it simple. Keep your stance simple. You do want to become a trend trader, because a trend trader can make you profit whether it goes up or down, but start with a route first that works well. If you notice that you want to do S&P, and S&P tends to go up, 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 like over the years it's been up, 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 then you can take that stance. If you want to do gold and you notice that gold has been going down, 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 over the years, and that's the stance you want to take, okay. Now, one thing I do want to say about that, in regards to stance, is that you can look at a larger time frame trend, and it could still do something different within a day. Okay. So when you look at a yearly trend and stuff like that, or a monthly trend, just because that trend for a year is going whatever, that doesn't say that in the day that you're trading that the market will not, go down. So you do have to adjust that part of it accordingly and see if you're comfortable. And like I said, do one thing at a time. So it's really good to master particular trades, particular, indices and things of that sort, so that you're not all over the place. Because lo and behold, you got two or three things open and getting confused, and one's going up, one's going down, and you're like, what? See what I'm saying? You don't need that. Never trade against the trend, even in a brief moment. If you feel like it's going to go on a downtrend, look to higher time frames like the 1 hour, the 4 hour, to confirm your stance before trading. Going against the trend can cost you money. Okay, so for example, there was one time, as me being new, I looked at a trend, and in that day it was kind of up and down. It had a lot of volatility, and it had a lot of volume. And so, honestly, that was probably a day that I should have sat on my hands. And I decided not to sit on my hands. I decided that I was going to just go along with what I was seeing people do in real time. Like, all right, bet, if that's what y'all doing, then that's what I'm doing. Well, guess what? Just so happened that as soon as I decided to do that, it decided to go in a total different direction. I lost money. Don't be that person. Don't be a Danny. All right, so that sums up everything. You want more? Whoa. You wanna tell them they want more? Okay, she says you want more. So join the voice chats, watch the setups, practice on demo accounts. From risk to riches, let's build together. You could join my free Discord community, where you could get referrals to mentors, growth, community, just talking about the stock market, etc. I could make it easy for you to find the things that you need to find. However, wow, someone's being really, really zesty and not even talking to us. Or you can join my paid Discord for signals, okay, free trading merch, and a once a month opportunity to win cash towards you opening an options contract. So my goal is for the people who are in the paid Discord, when the membership money rolls in, I literally take money from each membership that comes in, and get about $150 together, and give it to one lucky winner to trade them an option. And we walk through that trade together, so I can ensure that they're making money. So there you go. That's the only reason you would join the paid version, is for free things, free money. That's it. Um, and us walking through trades together in real time. However, other than that, I suggest my free Discord. So please don't ever join anything that's paid until you're making money. All right. All right. I love y'all. Thank you so much. And then we're going to get into more educational content in regards to futures and options with Risk to Riches by Danny.